GM. GM. This is Friday, the 2nd of February. Daily levels. Let's take a look at what's coming. So, first thing, a mini rant. There are no professional short sellers in crypto. You need to understand that. There are market makers who are contractually obliged to go short. There are some traders who go short and long. But if you know about TradFi, there's a such thing as a short seller who's the only direction they trade is short. They don't exist in crypto because they don't survive. And I was actually just thinking about it this morning. Because, of course, if there's ever a time you don't want to short, it's in a bull market year. But then I was just thinking, why would you ever short anyway? Imagine looking back 30 or 40 years from now and realizing that you missed generational wealth because you were shorting some fucking token. And you're shorting at the beginning of a new technology. And also, there's a great phrase which goes, bears sound smart, but bulls make money. Which is true. Think about this, and it's really ego that gets bears wrecked. Because when you want to short sell something, you have this big elaborate thesis. This is how the short sellers, and again, I have no problem with short selling. I've shorted a bunch, and I will short again. But my point is about being like a permanent bear, which just hasn't worked for 16 years in crypto, and I don't think it's going to start working now. 15 years. So these perma bears, and you see them in the stock market too. There's perma bears that were bearish on Tesla for the last 10 years and got blown out on every leg up. And now the Tesla actually looks like it's finally fucked, right? Tesla actually looks really bad now. I've got the old halving indicator on. But there were people that made it their career, literally made it their career, to be bearish Tesla for 10 years. Got blown out every step of the way. Blown out. And literally, I don't mean, haha, you got wrecked. No, they're literally blown out. Their funds were liquidated. And so good short sellers understand this, and they know when to play the trade and when to remove their ego. Because the only reason you would remain bearish on Tesla when it's in an uptrend for 10 years is ego. Same goes for crypto. You just look at Bitcoin. Like the bears call it tulips. Tulips never went like that. Tulip mania went like this. That was tulip mania. This isn't tulips. This is the adoption cycle of a once in a lifetime technology. So just a little reminder there. But the part about, I think it can be tempting for you to not want to be bullish at times, because basically you look around and everyone's bullish and you're in the same boat as a bunch of idiots, as well as smart people, as well as everyone. That's just a bull market. This is where you really have to not overthink it. Because that quote, bears sound smart, bulls make money, is so true. Bears do always sound smart. Look at all the macro fucking retards last year with all their nice elaborate thesis about why there's going to be a recession. It all looked great. It all sounded great. It was all feasible. It all makes sense. Right? It's not like none of it is, none of it's completely just made up, falsified. It's an interpretation of data, but the bear always needs to justify his position. The bull doesn't. Because the human condition, the tendency of all markets is just to go up and to the right because of monetary debasement. and Bitcoin exists exactly for that reason. And then there's new tech being built within crypto. Most of it is scam, but there is some real stuff being built. And again, if you're building something from zero, it's going to rise. And as it gets adopted, it's going to rise. So the reason why bulls don't need to be smart is because they're on the right side of history. If you're on the right side of history, you don't need to have an elaborate thesis. You can just say, there aren't enough Bitcoin on the planet for everyone who's going to want a Bitcoin. Simple. There's 19 million of them. There probably will never be more than about 19.5 million. There's a 21 million hard cap, but there's a million in Satoshi's wallet, and there's probably another million that have been lost. So there'll probably never be more than 19 million. Really. And that's just fundamentally not enough. It will soon be the scarcest asset on the planet within 50 years probably. And the most valuable. It's in the top 10 assets globally, all assets. It's number 10. Gold is number 1 currently by value. But Bitcoin's better in basically every single way. And it's inevitable, right? So I think we know that. But just a reminder that as we go through the bull market, your fellow participants are going to get more and more retarded, and that's fine. This is how it goes, right? Everyone will be right for a while. You don't need to try and be smarter than them by getting bearish. It's not going to end well if you do. So, as for right now, there's a couple of paths I'm seeing on the low time frames, and then monthly preview. I'm going to drop that in a few hours. Monthly preview is going to show a lot more detail around Bitcoin, altcoins, and liquidity. But here's roughly what I'm looking at. This obviously isn't for today, unless we get a fucking crash. But in a simple sense, I see this gap, this order block. I see it getting filled. The longer we go without filling it, the more people are going to think, oh, 40k is not going to get revisited. Yeah, I'm pretty sure it will, because there's still people that are waiting for 38, 36, 34, 32. So coming to 40 is nothing. That will only get those people even more excited. The bears. The doomers. And just the people who want to buy back lower. But they won't want to buy at 40k, because they didn't want to buy at 40k over here. They won't want to buy at 40k again. It'll flush out, little bear trap, and away we go. I think that's A is my most likely path. Not saying it comes straight down, but whenever, if and when it does. If not, those stops would at least get taken. I don't see these people getting a free ride. So basically anyone getting long here, I don't really see how they get a free ride all the way to fucking all-time highs. So to me then, just from a trading perspective on the low time frame, it doesn't make sense to go long at 43 if I think that at least those stops get taken, like path B, where it just grabs the stops, front runs 40k, and away we go. So it's good to draw these out and have these paths in mind, just to kind of ground yourself and remember that's what I'm expecting. The reason we buy spot, and I've got spot and I've been buying the dip, is because if it goes up, I'm over the moon. I'm fully invested in anything I had before December, like before the new year, is all still fully in spot. New money coming in, I've put quarter of it in. As I said the other day when I bought AKT on the dip, I bought ETH on the dip, but then I swapped the ETH to Bitcoin. So I still have cash, a little bit of cash on the sidelines, and any more profits I'm making, the profits I took off the Bitcoin long here, that's just sitting in Tether. So you remember from last week, I got long down here, close it here, and close the rest of it somewhere around here, around the red zone. That's just sitting in cash. I haven't put that into a coin yet. So I'm still stacking a little bit of stables for mostly altcoins, AKT, maybe another AI coin if I can find one, and Bitcoin. But longs, trading wise, that'll come that'll come after. I think we get this move down at some point. So there is, though, in between there, if we continue to hold the 4 hour bands, I'd like to see a push down though. I'd like to see a triangle lower and hold like that. If it keeps holding at this area, day trades to take out that high are pretty good. If it keeps hanging around here, it's telling me it's going to go for 44. Grab those stops at the very least. Otherwise, we fall down into this gap. We continue consolidating like this. Then we push up. And then we go down. I think if it was going to head back to 40, it probably would be weaker than it is currently. So the way I'm looking at it, just from a liquidity perspective, I think Bitcoin wants to take whatever liquidity's up there, stop out these shorts, and then probably make its way down. That's kind of what I'm looking at the moment. As for the rest of the market, we got ETH BTC, which is just a steaming pile of dog shit. And I mean, ETH is just, I mean, it's alright, like it's not too bad. This could be a bottom forming, and maybe ETH just chops around for ages and then starts to grind up. I still just prefer Bitcoin really in every way. I think the ETF flows will come to Bitcoin. ETH's chance to run, like ETH needed to run January. If it doesn't, it needs to run in February. Because once you get to March, you're a month away from the halving. It's hard to imagine Bitcoin not having a dominance run going into the halving. Bitcoin has always been stronger than the rest of the market going into the halving. It's actually usually a week or two before the halving, if not just after the halving. That is usually when Bitcoin goes down. But we've had 3 halvings, 2012, 2016, 2020, and price has risen into the halving every single time. The halving is broadly a meme, like the lead up to it. After the halving, it definitely affects the supply-demand dynamics, but most of it is psychological. It's mostly psychological. And I think it'll be the same again, self-fulfilling prophecy. People think price goes up into the halving, therefore I'm going to buy Bitcoin and I'm not going to sell it, and price will go up. I think it's really simple. I think it is that simple. Now, I don't know if it's going to go to fucking all-time high before the halving. I'm not in that camp. But I think we can get above 50k before the halving, or around 50k. I do think that's possible. No reason why I couldn't. Which I'll talk a little bit more on monthly preview about. So ETH BTC, Bitcoin dominance. Bitcoin dominance starting to rise up again. Still on this weekly trend. So that weekly candle after the ETF should have been the end of Bitcoin dominance and the rotation into alts, but there was no continuation of it, at least not yet. So I see Bitcoin still being stronger than the market on balance, which is good. That's what you want to see. And then for alts, you got Solana, which is looking good. Right, Solana holding up quite nicely, consolidating up in this area. And then alts as a whole, total 3. Pretty good, just in this consolidation. I think, again, like I've been saying for weeks, I think this just keeps being choppy, whether it goes down first, up then down, sweeps the highs, big sweep. I just see altcoins as being a lot more tricky to trade. And a note that I want to make, I'll finish this with a message to anyone doing the trading competition. A new trading competition that launched. GM to everyone doing the trading competition. Entries flying in. Entry rule is blue belts. So if you're a blue belt, you can enter. What you need to, and this isn't, nobody should change their trades based on what I say. Trade your systems. But don't be aggressive. Don't try and make more returns because you think you need a certain number. In December, we had a trading competition, and the winner, Kun, had, I can't remember exactly, but it was around 70R, 70. But that was in a very bullish market with a lot of nice, clean, trending price action. If you look at altcoins from the 1st of December here to the 31st of December, right? Altcoins were literally up only In December, it was super nice trend trading conditions. This month, February, is less likely to be that. February is quite likely to go maybe as low as 450 and as high as 530 and just stay consolidating. So be aware of that. I know a lot of you will look at it and say 70 was the winner and Mr. Robot was around 60, and so first and second were both above 60 R. You're not going to need, I don't think you're going to need that high of an R to win this competition. So doesn't matter. Stick to your systems. If your system tells you to trade, trade it. But resist the temptation to push harder, thinking that you need a higher number. Right? It's not about trying to force your way to winning. It's about trading your systems, trading the way you should trade, following your plans, and if you win, you win. That's it, right? If you try to get 70R or even 60 or 50 or any target, you're not trading the process, you're trading the outcome. You're saying, I need to get this. Every single time I've ever tried to trade to a certain amount, whether it's amount of R or amount of money, it's never worked. Because fundamentally, it's the wrong approach, because you're focusing on the outcome and you're not focusing on the process. The only thing you can control as a trader is the process, so stick to that. Focus on that. And you'll be surprised at what wins this competition. It's a really good example. If we do get a month which isn't trending, if it's more sideways, you'll see that the winning total will probably be lower. That's totally normal, because trending conditions and ranging conditions offer completely different return profiles. So just a little reminder there for anyone in the comp. And everyone else, I'll see you at 5 p.m. UTC. Casual Fridays. Some would say the best stream of the week. GM. See you all then. Talk soon.